Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am Pushpendra Mehta, and my guests for today are Mike Richards, CEO of the Treasury Recruitment Company, headquartered in the UK, and Craig Jeffery, Managing Partner and Strategic Treasurer. Welcome to the Open Treasury podcast, Mike and Craig. Thank you for taking the time to be with us on this podcast.
Pleasure. Thank you very much for having us.
It's good to be here. And Mike, I know we spoke just last week on some recruitment and salary items on a webinar. So it's good to be on a podcast with you.
Well, yeah, I'm becoming a frequent flyer. I'm hoping I'm getting some air miles for these as well.
Great. This week, we are going to focus on 8 stories that cover 4 themes. We'll touch on interest rate hikes, supply chain challenges, Bitcoin headwinds, corporate cash and bank account management, and finally, account takeover attacks and cybercrime. You can find these articles in the show notes from this podcast or by looking them up on CTMfile. So the first 2 stories pertain to inflation and interest rate hikes. In the US, the consumer inflation rose 8.6% through May 22, the highest rate since December 1981. The Fed announced its largest interest rate rise since 1994, and additional rate hikes are expected in the coming months. In the UK, the Bank of England has confirmed its 5th consecutive monthly interest rate rise, increasing base rate by 0.25% to 1.25%. My question to you, will these interest rates hikes stall these economies and slow down hiring in the treasury sector? From a human resources perspective, in addition, what skill sets do you think treasury professionals or finance professionals could leverage to tide over economic slowdowns and layoffs?
So you're talking about skill sets. Before that, Bush, I was going to come back to what I'm seeing the market doing straight away from that. Let's talk about the UK market for a moment. The energy prices and the energy costs, and we're not just talking price at the pump for your gas or anything else. In actual fact, your household energy prices are through the roof. And with, yes, that's having an upward push on inflation. And exactly as you say, that, interest rates are rising, both this side of the Atlantic and your side as well. That's having a greater effect on the market. So I'm starting to see candidates being much more open to a move. Prior to pandemic, they weren't looking for a move. We're coming out of it. And I think that will have a knock-on effect. I'll give a direct answer to your question about skill sets, but I'm having candidates now register with me or re-register who a year ago were saying, I'm going to wait this out. I'm not going to look. In actual fact, they're now saying, I need a new job. Why? Well, because I won't get a pay rise where I am. I need to move to get that above inflation pay rise to make a big step up. Now, that then impacts on what skill sets. And again, later in the show, you'll talk about technology and everything else. People say to me sometimes, do I need a real data guy, my treasurer or senior treasury professional? I don't think you do. I think what you need is a really great, solid treasury professional who knows, and it's a bit like a ringmaster, at a circus, and they say, right, I need to go to my data guys over here. I need to go to my accountants over here. I need to go to the business over here. And they're having to sort of that 3-ring circus. And it's those guys that I'm, being asked to hire. I'm recruiting a treasurer position at the moment for an asset management company. And the skill set they're asking me for is probably more diverse, and it's a very demanding search, but it's more diverse than it perhaps was pre-pandemic or a few years ago. So that's the skill set. I know, long answer to a short question, but that's what I'm definitely seeing a pressure on.
Mike, can I ask you one more question before I move on to Craig? You raised a very important point about skill sets. This is possibly not the last recession treasury professionals are going to be seeing in their careers. So what lessons they could learn to equip themselves better, if there was an economic slowdown in the future, an imminent recession, or any other headwinds that they had to combat in their career?
I was going to say, look at the past. do your history, do your recent history. I was just talking to a friend and they said, well, you as a company, you've been coming on 20 years. And I said, yeah, we've been three recessions. And I think actually that's what treasurers need to look back on. What have they learned and what happened before, during and after each recession? What were the skill sets they needed from those around them? They're upping the salary bands. They know that's a skill set. They really need a skilled treasury professional at that level. Whereas probably 3-5 years ago, they probably wouldn't have paid up. Now it seems yes, we need a great head of middle office, and they need to be global, and they need to be polished, and they need to be blue chip. So that's where I'm seeing the demand level. That's what treasurers are looking for, that higher skill set, as it were.
That's a very interesting perspective. Craig, I'd like to pick your brains on, he used the words global, blue chip. Do you think these interest rates hike or these hikes will help in combating inflation and alleviate the concerns that blue chip corporate treasurers harbor about the economy, interest rates, and inflation?
No, not yet. I think they're behind. The central banks are behind. They're playing catch up. And so I think it's going to take a little bit more to get there. Mike brought up an interesting point. He said, look at history. And we go back to periods of very high inflation. And I think there's concern that it stays really high for a period of time. If you go back to 1981, a lot of people that are professionals may not have been born, or they were in school. They weren't in the work environment. And so we certainly have battled through different types of difficult situations, but this idea of going back to history matters. And the fact when the central banks are behind, it takes a longer period of time to stabilize. Now, I guess on the positive side, not to be all doom and gloom, but the Bank of England is doing monthly adjustments, which is quick and makes the step up. The U.S. Fed is doing bigger steps. They do them on a less frequent basis. And they've also indicated and telegraphed that they're planning on doing more bumps. So once they get caught up, then we should be back on track. And the concern is always we're behind or we overcorrect. That's what I think the big risk is. And to Mike's point, risk managers as treasurers need to be able to adapt to these changing times.
Adapt to changing times. That's true. And the next story is also about adapting to my mind, which is about continuing supply chain challenges. First, it was the COVID-19 pandemic, and then came in China lockdowns. These two factors led to the global supply chain disruptions that is likely to continue for months to come, according to the logistics group DHL. Mike, do you think these supply chain bottlenecks are partially the result of labor shortages?
Good question, Push. If I knew that, I think I'd be paid a lot more. I think labor is a part of it. It's one factor amongst many others. I mean, Craig, I think you guys are more experienced in some of this. It's not something I've had before as a specialist treasury recruiter. People coming to me and saying, "Oh, our supply chain is broken, and we need some people and things." There's other individuals. Treasury is sort of part of their job, not the only part of their job. I don't know. I'll push it back to you guys.
Yeah, Mike. When you were talking about that, I was thinking of Push's question. You asked about the labor shortages. We've seen that in different areas already. In the U.S. with trucking, and what happened is trucker wages shot up to try to fill in the human element, the people and the staffing shortages. But if you look at the article about DHL, he comments about there's a lot of structural elements, things that take a while to change. Capacity. New container ships, et cetera. So once you get behind on a fairly tight running process, it's not just people, it's goods, ships, to move those things along. So they're in it all the time. So Tim Sharwath, who's the DHL's CEO of Global Forwarding Freight, he thinks it's several years before it's back in line. It should get better in 2023 and probably will be close. I guess he was talking about 2024, getting close to pre-2019, but it's going to take a while for these systemic changes and structural adjustments to correct for that.
So, Craig, what would your advice be to corporate treasurers to mitigate the continuing effects of global supply chain bottlenecks or disruptions?
They need to continue to work with the rest of their organization with their customers and their suppliers to find ways to make that work, whether it's providing liquidity to be more attractive, but being creative and helping that out, because it's an indirect relationship. So as an advisor to the business, do whatever they can, make sure they're aware of what's happening and support it.
Moving forward to the next section, which is about the Bitcoin headwinds. Bitcoin, as you know, fell to its lowest level in 18 months as the cryptocurrency market took another dive due to last Friday's US inflation data. Binance, the world's largest cryptocurrency exchange, temporarily halved Bitcoin withdrawals after the fall in the cryptocurrency market. Mike, do you think the suspension in Bitcoin trading will affect the employment market, and will it wean away people from working in cryptocurrency at large?
I definitely think it will make Treasury professionals more concerned, more cautious of making that move into that industry. Because I think at the end of the day, they're risk averse Treasury professionals. That's their job. That's, if you cut them, like a stick of rock, they, risk, and, being aware of all those different things. We spoke just briefly before the show kicked off about, had I seen that there are crypto firms that have been making layoffs and movement, and people, when Craig and I spoke on a recent podcast about salaries, we'd seen people moving around. For instance, Coinbase, they were making some, the digital currency wallet, they were making some, reorganizing, and that was leading to some loss of employment. But in actual fact, it wasn't actually impacting on the Treasury professionals there, because it seems that they're much more sort of insulated from a little bit, or they're right at the heart of things where you really need those Treasury guys to be managing your risk and looking after it. Do I think actually when they are trying to recruit in the future, is that going to be tougher for them? Yes. Are they going to have to push up the premium that it costs to get someone in there? Of course it is. And or also people are going to want more guarantees and more, and how are they going to do that? That's one of the key things. When I was scribbling this down the other day, I was thinking, wow, that's a good place for me to maybe looking for great talent who wanted to get into crypto and they're really interested in moving into new technology. But now, are they regretting it? Are they thinking, was this the best move for me post-pandemic? And that's definitely an area we're not necessarily just looking at people moving people in. We're also saying, well, you've got some great experience in there. Maybe you want to make a move out of there and you've got that experience in your back pocket. Makes you more valuable somewhere else that you've been through that sort of thing. But it's still very new, such a breaking technology as such.
Craig, what are your thoughts on the Bitcoin headwinds, the volatility, and the suspension in trading? As a treasurer, how would you see it?
Yeah, I guess as I look at it, even stepping back further than as a treasurer, you look at Bitcoin and some of the other more, let's just call them speculative digital currencies. Volatility is great if you're a speculator and it moves in your favor. When it moves against you so heavily, that creates some general concerns. And so the applicability can vary. A lot of corporations don't do anything with it. Some have a very, very small position as a diversification play. But when we look at, what's going on, what's impacting some of these I'll just call them non-CBDC or non-true stablecoin type options, even the volatility, even in the stablecoin arena, created concern. But this whole suspension of redemptions, withdrawals in Bitcoin is another area that creates cautious. And so this attempt to govern the activity creates more concern, I would say. So I think these are a real returning back to the Earth's atmosphere of things like Bitcoin. I think there's a lot of room for digital currencies, particularly with central bank digital currencies or those that are stable. But I think we see a lot of this volatility and bumping around as, a warning sign to those, even those who may be more speculatively minded with what they do. Certainly not. I mean, that's not the typical corporate treasurer perspective. Though people are looking at their wallets and how they can accept payments in different kinds. This is just another caution on that road.
Moving from one story about caution into the other, which is the next section about corporate cash and bank account management. According to the 2022 AFP liquidity survey from the Association for Financial Professionals, a typical organization currently keeps 55% of its short-term investments in bank deposits. the highest figure since 2016. Are corporations choosing safety and being cautiously hopeful while building up liquidity to reduce uncertainty?
That's their one of their guiding maxims is to go towards safety. And if you think about this, I always remember Ben Campbell describing safety across several different dimensions and thinking of it as an envelope. Moving more to short-term cash is a common way to go when there's concerns about volatility or shifts. And I think the other aspect that they reported on is the businesses planning to increase cash holding declined by 10 points from 47 to 37 since 2021. So in the intervening year, there's less that are getting more and more cautious. They have pretty sufficient cash by and large or in total. And so they're pulling back on this. So this follows some of the stewardship principles, protection of your core principle. That's helping organizations weather the storms as they see them coming up.
Right. Mike, may I ask you, in the UK, do you see the same sense of stewardship, protection, security, safety, by and large, those buzzwords or those important maxims being discussed within the Treasury community?
I was just listening to what Craig was saying and sort of scribbling some notes because it's exactly what stewardship, great word, and a great phrase rather, that actually that's where many of the treasurers, and as I said to Craig the other day, that I've interviewed 210 treasurers on the podcast, and we've used that as what's the word? I've really got to understand much more about treasurers through these conversations globally. But the fact was, sort of stewardship is exactly what they're doing. If I think back to our Treasury salary survey 20 years ago when I started it, we used to ask this question about, are you a service center or a profit center to the business? Within 2 years, so this is back in 2004, we dropped that question off the survey because it just was irrelevant. All it's about is, making sure that you provide that service to the business. It wasn't a service center, more a service. You are a steward. You are a point of safety that looks after all the company cash. And that's what when the CFO says, where are we up to? You're the person they turn to. And that's what I've discovered over the time. So yeah, totally agree with everything Craig said.
That's great. The next story is about Bank of America announcing that their virtual account management solution will now become available to US businesses. How can corporates benefit from virtual account management solutions of AM?
People have either regular bank accounts, which are in a sense virtual anyway, or you can have virtual accounts, which are, I'll just call it a sub-ledger on a bank platform. Where companies can take advantage of this tends to be in the area they have the greatest pain, opening and closing bank accounts. The activity that goes around that tends to be extremely painful for most. That's one of the biggest issues people have. Secure email is another one that comes up where people identify that as a thorn in the side. So the ability to open up accounts and to push your activity through that is, one of the advantages of a virtual account. The other aspect of it can be less expensive and give you some additional features or functionality on an efficiency basis. Those all point to, strengths for the use of virtual accounts. Now, there's a lot of talk about virtual accounts across a number of institutions beyond Bank of America. People are using them, but I think the more you lower the hurdle of establishing, account functionality, the more organizations can benefit from that. And so this is a nice move back to the US for Bank of America with this functionality. I think positive on all accounts.
Mike, from a human resources perspective, do you think the adoption of virtual account management solutions adds to the repertoire of skills of Treasury professionals, or in some way enhances the adoption of technology, gets them to think from a more futuristic perspective?
Just put it a different way. Has anyone ever put on one of the job descriptions, we want someone that's handled virtual bank accounts? And the answer is no, never. Is it something that people, should have had an awareness of? Yes, definitely when they go to the next conference and someone's saying, this is how we implemented it, and it's a great thing to have on your resume. Yeah, it's lovely. Is someone ever going to say to me, this is a deal breaker unless they've got it? No. And I think it's going to continue to be so. I think, all treasurers, I sometimes say to them that, and I ask them the question, often that, are you seen by your CFO? What are the challenges? Because lots of stuff is coming at the CFO's office and they're saying, oh, can you do this? And the bank's saying, oh, we want to do this. Can you help us? And a lot of the time, on top of an already busy work schedule, I find a lot of treasurers are saying, right, can you be our point man on this? We want you to lead through this. And this might be one of those, can you look into it? Can you look into it onto already, which is a massive to-do list? And I think actually it's more about the pressure they might be under. So yeah, it's a great thing to have, but no, it's never a deal breaker.
Good to know. Now, the next story is personally something which is close to my heart, and I have a question for each of you. It's about the proliferation of cybercrime, particularly account takeover or ATO attacks that are on the rise as a result of the increasing popularity of the buy now, pay later or BNPL. According to Imperva Incorporated, a pioneer in comprehensive digital security, attacks on financial services and fintech companies have increased by 58% in the last month alone, as noted by the Imperva threat research team. Mike, if I may ask you first, with the rise in frauds and cybersecurity attacks, as a recruiter, when you have conversations with senior treasury professionals or middle-level treasury professionals, what are the important aspects they look for or you look for when it comes to hiring cybersecurity experts for a treasury group?
Again, if I think back to some of the people that I've spoken to, when I go through, I said, look, tell me about your user testing and tell me about all these. And it's part of that skill set, if that's the right way to answer it, that, they're definitely, you need to understand this. Cyber is, on everybody's minds and, dealing with all the challenges of it. Again, going back to that earlier question, is it something that, is a deal breaker on jobs? No, it's not. But I am seeing it, that the treasurers definitely need it. They need to understand it. It's, if I look back, say 10 years ago, would I have seen it on a resume? Would I have seen it on a job description? No. Am I starting to see it creeping in there? Yes, definitely. And it's becoming one of the sort of 4 or 5 paragraphs, and it's part of risk management in the, enterprise risk management. Has this treasurer had experience to cyber? What are their levels? And it's sort of not a tick box, but it's more, right, okay, they've got a great understanding of it. Tell me about their cash management. Tell me about their people management. And so that's part of the requisite skill set. It's now there. It wasn't 5 years ago. It was starting to creep on 5 years ago. 10 years ago, wasn't even on but now I think everyone needs to be part of it. We all do in our day-to-day lives. So I think it's sort of growing from there, sort of thing.
You make some great points, Mike and Craig. From a human intelligence perspective, and let's say on analyzing the vulnerabilities perspective, including training and development, what can corporate treasurers do to reduce account takeover attacks?
Yeah, so I think this example here, this article about buy now, pay later and the level of attacks, we learn on the consumer side from the corporate side. There's some things that cross over. We certainly learn on the corporate side from what comes on the consumer side, both in terms of capabilities, but also in terms of fraud. And so while this buy now, pay later account takeover attacks is largely focused on the consumer side because they're making more headway, this does not mean the corporate side is out of the woods. We see this rapid growth and scale of creating corporate style identities, many personas. We see that even in surveys. We have bots that come in and take surveys, try to establish credentials, sign up for newsletters and other activities very, very systematically. It's extensive. This is not someone setting up a couple fake IDs to download a report, not get a follow-up. But this is massive. And so they're learning on the consumer side, and they will continue to increase their ability, effectiveness at doing this on the corporate side too. So the idea is we don't need to just watch in what's in the corporate area for a corporate treasurer, because the consumer side of things can inform us as well. We have to be mindful of the criminal playbook, and the criminal playbook keeps getting adapted, so it'll adapt from the consumer side to the corporate side and leverage and gain efficiencies there. And so this is an area of we need to be afraid and concerned about what goes on and stay alert to look at that. I know that's not answering all your questions about what do we need to do, but the first thing is to be aware of the playbook, what they're doing, and then assess the vulnerabilities in this case. And one of the things that I will say is every corporation needs to understand all of their payment flows. They need to have a complete inventory, understand where the weaknesses or the exposures are. And there are weaknesses and exposures. And it's the level of those and what compensating controls exist. So this is, this is that issue of we have to continue to watch this.
Excellent. May I wrap up by asking both of you, what is your choice for the biggest or the most important story of the past week or the stories that we chose today, and why?
It was a toss-up between the Fed interest rate rise, obviously, but that's news everywhere. But I thought some of the insights actually on the crypto and some of the concerns in there, when I was reading through, it made me do further research. And actually, I was thinking, okay, and I listened to a podcast called My First Million, where the two presenters on there, they talked lots and lots about crypto, Ethereum, and all the different, it's so brand new. And that's, as a recruiter, I listened to that because I said to someone the other day, it's great when I'm walking along and listening to that, I feel like I'm educating myself. And I think that's a challenge for a lot of treasurers to be able to, on top of their day jobs, learn about this brand new technology and some of the challenges coming through. And it's fascinating as well, as much as anything. So I think that was, the crypto was the one that stood out to me, that some of the articles in there.
Excellent. You said educating, and education is an ongoing and continual process. So I wouldn't agree with you more.
Yeah, I'm going to bubble up the Bank of England and Fed interest rate rises. 5 months in a row for Bank of England, the Fed surprising a little bit on the upside, all reflective of the upside surprise on inflation. I think that's coupled with lots of CEOs being concerned about recession and impact on how things look going forward the next couple of quarters. So it's a somewhat of a negative look here, but I think that's what I'm seeing is the biggest impact over this past week or so. Great.
So Mike, you chose Bitcoin and volatility. Craig chose interest rate hikes. And I, like you rightly said, negative. I probably am most concerned about cybercrime. To my mind, maybe I've done quite a few stories in the last few months around cybersecurity somewhere, because cybersecurity, for every 39 seconds, there's some sort of a cybersecurity threat or attack. So I'm concerned about that. Account takeover is one of them. That's my top story for the week. And to my mind, this may be the year of cybersecurity attacks. So that's why I've chosen account takeover as the most important story of the past week. Well, thank you so much, Mike and Craig, for your insightful and informative opinions. It means a lot to us. A very big thank you to both of you for sharing your thoughts with us. We would also like to thank our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.